So I think some people are familiar with Ellevest, maybe not everybody. It defines itself as a financial platform for women. What differentiates it, Sallie, from other, say, male-dominated platforms?
Yeah. Well, first of all, I'd say we're the number one financial platform for women in numerous ways. There have been numerous marketing initiatives for women to encourage them to invest over the years. And Ellevest is really the first that's truly engaged women with their money. What is different? So much. This is not a, hey, you go girl, let's invest together initiative. We changed the product from the ground up. We spent 2 years doing research on what would engage women with their money. And we built a bunch of what we would say are must-haves, such as an investing algorithm that knows she's a woman. That matters because she lives longer. She earns less. Her salary peaks sooner. She takes more career breaks. That information, getting that information from her is important. We then provide super bespoke investment portfolios that are built for each of her individual goals. And then we have things that she wants, like investing for impact. For women, it's truly important for them to at least understand what impact investing is and where their money is going.
I want to drill down into the algorithm a little bit that you just mentioned, Sallie, because it does account for, I guess, different outcomes or different paths that women take. There's pay gaps, career breaks, longer life expectancy. So how does that work for the algorithm in terms of what it provides for your customers?
Yeah. Well, first of all, I would step back and say, like, we see it again and again in business and in our society that will say this is for everyone, when in fact it's based on research done with men, et cetera. So we all know, heart attacks, right? For years, women have died of heart attacks at too high a rate because the symptoms that doctors were looking for were those that men manifest. Crash dummies built in the image of men. And so I would argue that so much of the investing industry, where, as you know, 98% of mutual fund dollars are managed by men, and something like 99% of investment dollars are managed at companies majority owned by white men, that as they were building something that they thought this is for everybody, they did as we tend to do, build it for themselves. And so the investing was trading, buy low, sell high, the gamification of it. What we found at Ellevest is that women are really looking to reach their goals. And so what we built was an investing algorithm that is 100% based around getting her to that goal. In 70% of markets, for example, I want to buy a house in 5 years. This is how Ellevest helps her calculate, this is how much you can afford. This is what you need to input. That's what the investing algorithm does. There's another, and then I want to have a baby in X number of years. I want to retire in Y number of years. And so the inputs in the algorithm tend to say, your salary is going to peak sooner, right? Oh, you've got a PhD in computer science and you're a middle manager in New York. Okay, this is what your wealth will look like over time, which is different from what a man's would be in a similar position. And so adjust the deposits she needs to make, adjust, how much that, anyway, adjust.
Right. There are differences and the algorithm accounts for that. And what about the model, Sallie? There's a subscription model with different tiers. You've got one-on-one coaching on top of that. How did you come on? How did you decide to that model would work? And are there other sources of revenue?
Well, it's so interesting because what we had to do is go in and say, what's out there doesn't work for her today. You and I and Andy have spoken about when a woman has a relation, when she's married to a gentleman and he passes away, she tends to leave their joint financial advisor 80+% of the time over the next year. When you look to fintechs, and particularly wealth techs, most of them, the majority of the folks who they're downloading are men. We are the one where it's 90% plus women who are doing the downloading. And so you have to start from a place of what is out there isn't working. Now I'm going to be open-minded. And what was such a really interesting discovery is during the pandemic, when we were still investing only, and we reached out to women, what can we do for you? We stopped everything. We're just going to answer any money question you have. And we started to hear things like, I want help making more money at work. And my initial reaction, having grown up on traditional Wall Street, is, well, that's ridiculous. That's not what financial companies do. And the team's like, let's try it. And all of a sudden it took off. And so as we moved away from being investing only, and we're providing banking as well as money coaching, career coaching, and then for some women, private wealth advisors, we said, you know what, let's find a way to engage with her that is a fair exchange of value. And a finding that we had is that under, sort of basis points, which is how the industry traditionally charges, is opaque. Right. I mean, you know what a basis point is. I know what a basis point is. Most folks say, well, it's a basis point again. And how much are they charging? And is that fair? And does that feel right? Whereas $5 a month or $9 a month, got it. Got it. And so we found that it wasn't that she stayed away when we did basis point pricing, but her shoulders just went down when we went to dollar pricing because she could more easily assess that.
Fascinating. And do you do other things like commissions on trades or payment for order flow?
No. Annie, it's interesting. I've spent a lot of years on Wall Street, and we are building the company that we feel proud of, the one that we want our daughters and our sons to work at. And one thing that has kept, Wall Street, I think, from gaining as much trust as they would like is hidden fees. And so we, it's a here you go, $5 a month.
Well, Wall Street is the king of hidden fees. I mean, look at the NYSE and how much it costs to trade a stock when we started out in the business, and where that is now, for instance. And then now there's blockchain is the next beyond that. We can talk about that. What about this gender investing gap, though, that you talk about, Sallie? What is that, and why is it hard to tackle? And what are you trying to do about that?
Well, and it's part of the even bigger issue, which is the gender wealth gap. So, Andy, you probably hear and talk about the gender pay gap, and women make 82 cents to a white man's dollar, and equal pay day, and it's slowly moving in the right direction. Blah, blah, blah. But what we miss is, well, how much does she have? How much does she keep versus him? That's 32 cents to a white man's dollar. And for Black women, it's a penny. And whereas the gender pay gap has slowly, not fast enough, but slowly been getting better, the gender wealth gap has been getting worse. One component of that, Andy, is the investing gap. That women, don't have as much money to invest as men, but even on a percent of their net worth, women keep a larger percent in cash. And so have missed out on the, wealth compounds. And so they've missed out on that, and more men have gotten more of that. And at the same time, she's got more student loan debt. She's got more credit card debt. So she's getting hit from the bad part of compounding, where you buy the dress that cost $100, and before you know it, you pay $200 for it because of the interest rate, right? And so it's been widening. And one way that Ellevest has approached this is absolutely, let's build the product for her. But the other thing we do is we do try to sort of open everyone's eyes that, hey, ladies, we're receiving some really damaging money messages out there. So, for men, most of the articles in media directed them about money are about abundance and trading and buying low and selling high. And for women, it's, 90% are negative, meaning buy this size tie, not that size tie, don't get the facial, don't buy the latte. Sort of like it's money is scarce and it's your fault. And nowhere does it say, do you see this systemic issue where you're not making as much money as the guys are, and where we just had this pandemic where you had to step out of the workforce, and when their childcare needs or elder care needs, it falls on you, but you better buy a smaller size tie, lady. Of course she feels bad about money. And so what we're also working to do is that sense of loneliness she has, which is her number one or number two emotion around money, building that community. So she's got a place where she feels like she can learn and go with like-minded individuals, as opposed to sort of the, oh man, I'm covered in jargon. What do I do?
Right. Hey, I mentioned crypto and blockchain. I don't think you guys are doing that right now. Why is that? Would you consider doing it?
Yeah.
NFTs, and how do you decide whether to go in that or not?
Yeah. Well, first of all, to be clear, Ellevest started and remains at its core an investing platform. We're not a trading platform. And if folks want to trade, amazing. And there are plenty of places that they can do it. Can crypto become part of a diversified investment portfolio? I think it can. There's definitely something there. Now, whether it's, which type of cryptocurrency it's going to be and choosing that and all that stuff. Remember, you could have perfectly called that cars were going to take over all of our roads and all of our lives and still lost a lot of money by investing in the wrong car companies. And so, as with everything, in investing, diversification is a positive. Diversification, some people have said, is the one free lunch in investing. So we're not for trading it. We, can certainly see our way to investing in it.
Right. Skeptical question, Sallie. A student of mine at Columbia, a young woman actually, asked me about pink washing, as she characterized it, and specifically mentioned your firm and said, oh, isn't this just a business where it's making women feel good by checking boxes and you can put money here, but it doesn't really do anything?
Oh my gosh. So many thoughts.
Mm-hmm.
First of all, even if that was what we were, would that be so bad?
Mm-hmm.
Because money is women's number one source of stress. You know what the number one driver of her confidence in her ability to achieve her future goals? Doing something about it. Opening an investing account, setting up a recurring deposit, opening a savings account, right? That action, that beginning to move towards financial wellness, I'm not talking financial independence, is a driver of confidence in her future. That very act takes a source of stress and turns it into a source of strength. But, young lady, you have been socialized by this patriarchal society that for women is inferior. And by the way, there's plenty of evidence, right, of the big pin and this is pink and this costs more and this whatever. If you look at Ellevest and what we are delivering in terms of investing, in terms of the career coaching and the money coaching and the private wealth advisors, the exchange of value certainly feels quite, very fair. And it is not just a marketing thing. We have rebuilt the product from the ground up. We have spent thousands of hours on this research. We are the only financial company out there built by women for women. But this is the shame.